Hello dear traders, you're watching the weekly review of stock markets with me, Anna Kasatkina. Wall Street stocks pulled back on Friday after the U.S. Department of Labor revealed better than expected payrolls report, which made traders scale back expectations for the Federal Reserve's rate cuts. The S&P 500 index slightly fell on Friday, closing at the level of 2,990.41. Still, the index posted a weekly rise of 2.24%. The U.S. labor market saw the best jobs growth of the year in June, but markets are still seeing a high probability of an interest rate cut at the Fed's next meeting, and these hopes helped to drive stocks to record highs. The Dow Jones Industrial Average also slightly declined on Friday, closing at 26,922.12. Still, for the week, the blue chip index gained 1.2%. Stock markets rallied earlier in the week on news that Trump and Chinese President Xi Jinping had agreed to restart trade negotiations, and China considered buying some U.S. agricultural products. Meanwhile, Trump pledged to not implement new tariffs and to allow U.S. tech companies to sell some goods to China's Huawei Technologies. The Nasdaq Composite Index settled down at 8,161.79 on Friday, but advanced by 2.44% for the week. Thus, all three benchmarks remained within striking distance of all-time highs. Dow constituent Apple shares edged down on Friday, gaining for the week 2.25%. But yesterday, the stock tumbled by more than 2% after Rosenblatt securities analyst Yun Zhang downgraded the stock to sell from neutral. The analyst said the core iPhone business continues to struggle and Apple will face fundamental deterioration over the next 6-12 months. Shares of Google parent Alphabet were in focus after reports that Alphabet director Alan Mulally was in discussions with satellite TV provider Dish Network to create a fourth U.S. telecom player if a planned merger between T-Mobile US and Sprint Corporation is completed. For the past week, Alphabet stock rose by 5.2%. You've watched the weekly financial review with me, Anna Kasatkina. See you back soon.